Hello everyone and welcome to another edition of the technical forex market update. I hope you all are having a good or had a good trading week last week and are looking forward to the activities of this week. Now, over the last month or so in the US dollar index, let me just switch over to the daily chart of the US dollar index. We see that the market has not really been doing much. After this huge rally in the dollar, the market is in a triangular consolidation pattern here and is not doing much for the major currency pairs. Now, I spoke about this last week, that the fact that in these triangular consolidation patterns, just about 80% of the time the market will continue moving up, and 20% of the time it will go down and reverse. So we just have to wait and see which way this market will break on the US dollar index. Translating that to the daily chart of the euro, you see that we have a similar consolidation pattern here, where the market is consolidating and is in a roughly a triangular consolidation pattern. So this could move to the downside, similar to the dollar index, 80% of the time, and 20% of the time the market could rally. Now, we are due for a rally in the euro, or the US dollar is scheduled or should be declining soon, because markets don't normally just continue in a huge trend forever without correcting. Normally the market will head down, correct, then continue to head down if it's going down. So it just doesn't normally go down and down and down and down forever. At some point, this market will correct. Now, looking at the British pound, we see that the market bottomed out near the 150 level and is currently at 153.96. The pound has been performing a bit better against the euro and some of the other currency pairs. So looking at, for example, the euro pound, we see that the euro pound is still in a downtrend, and this market has not bottomed as yet. So sometimes when we see that the major currency pairs are a bit stagnant, it's good to look at the crosses to see if there are any trading opportunities. Okay, taking a look at the Japanese yen, we had a situation that was developing where the market was in a triangular consolidation pattern, and the rules of technical analysis, this is a daily chart of the US dollar Japanese yen. The rules of technical analysis, as I said earlier, is that about 80% of the time the market will break up and 20% it will go down. Now, another rule is that once the market breaks resistance, it will come and test this former resistance, now turn support. So the market will test this trend line. So that's what is appearing to happen in the US dollar Japanese yen. The market is testing this trend line, and a successful test and confirmation is if the market will then rally. We would like to see the market rally above these doji highs and close above these highs and inch towards the 120 level. That would signify to me that the market has successfully tested this resistance, now turn support, and is on the way to the upside. Now, looking at the 4-hour chart on the USD Japanese yen, we will see that this is a trend line where the market is testing the trend line here, and So support is down by the trend line, this trend line here around the 118 level, as you can see with these lows, roughly 118.15 or so. So support is down at the 118 level, and resistance, medium term resistance, is at 120.50. For you position players, you would want to see the market punch above 120.50 to have confidence that this market is heading to the upside. So you have intermediate support at the 118 level, and you have longer term support down at the 116 level. Let me just show you on the daily chart and remove this trend line here. You have longer term support at this level of 116, because we see near the 116 level the market came up and found support once and found support twice, forming a double bottom. And if the market comes back down, let's say this formation fails and comes back down, we'll look to see if this 116 level is able to hold again, and then that will be a triple top bottom if it holds, and the market could rally. If it breaks below 116, you could see a deeper pullback down into the 114 and 112 level for the Japanese yen. Okay, taking a look at the Australian dollar, we see that the market is still in it's in a pretty strong downtrend, but over the last couple of trading sessions, we are consolidating here down near the 78 level, and bringing this down to the 4-hour chart. And this is an example of a top-down method of analyzing the market. You can look now at the 4-hour chart. We see that we are able to draw a resistance near 78.50 and our support down near 76.50. So what does this look like to you? This is a channel. The market has entered a channel at these levels. So let's say you are day trading, you will be looking for the level of 78.30 up to about 70, maybe up to about 79 or so as the top of the channel, and the 76.50 as the bottom of the channel. Okay, taking a look at the just one thing before, if we see that the Japanese yen is USD is slightly biased to the upside, and we see that the British pound is performing fairly well, relatively well, we can then look at a cross pair, the British pound Japanese yen, to see if there are any opportunities. So because the US dollar is currently strong, and the Japanese yen is currently weak, I'll be looking to play the weakness in the Japanese yen with the British pound or the USD Japanese yen. Those are the two markets I will be looking to play weakness in the Japanese yen. And I spoke about this for our coaching clients, the fact of gold, and this is a market where I continue to get a lot of questions about gold. Now, how I trade is that I'm not really very emotional about what I trade. I trade markets that are making me money. And a common question is, has gold bottomed? And I would say the market is currently in a series of lower highs, lower lows. For those of you who got the one indicator course, it speaks about the fact that when you have a series of lower highs, lower lows, you should that means that the smart money, so to speak, is on the sell side of this market. And what you'd want to see if you want to be long the gold market, you want to see this series of lower highs, lower lows be broken, and you want to see the market come and start to make higher highs and higher lows. That's when I will be confident in going long a market, for example gold. But until that happens, I would say the momentum is to the downside, and you'll have more success on the short side of the market. I'm not saying that this is not a bottom, but all I'm saying is that what the prices are doing currently is that we're in a series of lower highs and lower lows. And it also brings me to the fact that as a trader, you will have more success if you invest with the trend. I know I say that a lot, and one of the first questions traders will ask is when the market is in a downtrend like this, I will ask, what's a good trade to put on? A lot of times they will tell me about long trades. In theory, they would say it's best to go short, but when asked to put on a trade, they will try to put on a long trade. And this is the fastest way to lose money. Counter trend trading is, in my opinion, the fastest way to lose money, because you are going against the tide of the market. In a downtrend, it's always good or best to look for short trades. And just a personal rule of mine, in a downtrend, I never ever go long in a downtrend. And I have found that has filtered out a lot of trades. And that's a personal rule that I have, and I have seen much greater success when I have eliminated long trades in a downtrend. Okay, thank you very much for listening to the Forex Technical Update. I hope you have a good trading week, and I hope you have found this update beneficial. If you have any questions, you can send an email to info@asistrading.com, and we'll be happy to answer it. Thank you very much.